Oil didn't spike because a missile was fired. It moved because a country became unpredictable. Right now, Iran is exporting oil. No fields are shut. No tankers are burning. The Strait of Hormuz is open. And yet markets are already repricing risk. Not because something happened, but because something inside the system stopped being reliable. This is the Iran story most people are missing. Here's what actually triggered the unrest. Not ideology, not foreign invasion, not religion. Inflation. Iran's inflation rate surged to around 42% by December 2025, with point-to-point measures exceeding 50%. The rial collapsed to historic lows. Basic goods, food, fuel, medicine, moved out of reach for millions. In late December, protests spread across dozens of cities. Not symbolic protests, economic ones: truckers, market traders, industrial workers, water-stressed provinces. The response followed a familiar pattern: internet throttling, information blackouts, security crackdowns. Independent groups estimate thousands killed and tens of thousands detained, though exact figures remain unclear amid communication shutdowns. But here's the key point. This unrest does not need to succeed to matter. It only needs to introduce uncertainty. Because markets don't wait for outcomes. They reprice risk. Picture this. In Tehran's bazaars, stalls closing midday, truck routes slowing, internet connections cutting out, and oil markets watching all of it, through delayed data feeds, rumors, and widening uncertainty. This is how internal stress becomes external signal. Iran isn't just another country under pressure. It sits inside 4 global systems at once: energy supply, sanctions enforcement, regional security, and shipping choke points. Stress inside any one of those matters. Stress across all 4? That's when systems begin adapting, quietly, before anything breaks. Let's talk oil, because this is where the signal shows up first. Iran remains one of the world's major oil producers. On the order of millions of barrels per day still move out of the country. And this matters. Exports have not stopped. No major fields offline. No terminals destroyed. No Hormuz closure. And yet, prices moved. In early January, crude climbed to multi-week highs above $66 per barrel as unrest intensified, adding an estimated $3 to $4 risk premium. Not because barrels vanished, but because predictability did. Days later, prices eased again when markets judged immediate military escalation was unlikely. That back and forth isn't noise, it's the system thinking out loud. Now look beneath the surface. Iran is holding record levels of oil floating at sea, over 166 million barrels stored offshore. Floating storage isn't just inventory, it's optionality, it's delay, it's a sign that flows are becoming less linear. When sellers can't rely on stable demand and buyers can't rely on stable supply, oil stops moving cleanly. It waits, and waiting is expensive. This is where risk becomes mechanical. Insurance premiums widen, shipping contracts shorten, refiners hedge differently. Buyers tolerate opacity they wouldn't accept in calm markets. None of this requires a single shot fired. It requires uncertainty to persist. Here's another underreported risk. It's not bombs, it's labor. Iran's real vulnerability isn't military, it's operational. Strikes by oil workers, transport unions, port labor, or pipeline maintenance crews can disrupt output more efficiently than missiles. And unlike war, labor disruption is hard to deter, hard to predict, and hard to headline. Markets know this, which is why internal instability inside a producer gets priced before infrastructure damage ever occurs. Now add geography. Iran sits astride the Strait of Hormuz, a corridor that carries roughly 20% of global oil flows. The strait doesn't need to close to matter. It only needs to become less reliable, because reliability is the real currency of energy markets. Once reliability degrades, systems prepare alternatives, not efficient alternatives, available ones. To balance this, global oil markets are projected to remain oversupplied in 2026, with supply growth outpacing demand. This may cap long-term price spikes, but it does not restore predictability. Short-term volatility remains, and volatility is enough to change behavior. People ask, will the regime fall? Will Hormuz close? Will exports halt? Those are outcome questions. Markets don't trade outcomes. They trade probability distributions. And when probability widens, behavior changes. This is how shadow systems emerge, not because someone planned them, but because systems under pressure adapt. When compliance becomes risky, opacity becomes valuable. When documentation slows flows, deniability speeds them up. When insurance tightens, alternative logistics quietly reappear. This isn't criminal genius, it's survival logic. Now connect the arc. Venezuela showed us what happens when oil loses access to the official system. Shipping breakdown showed how choke points fragment flows. The Arctic showed where new corridors form. Greenland showed how sensing and alignment replace ownership. Iran shows the next step, how internal instability inside a keystone node forces the global system to prepare for adaptation before anything visibly breaks. So what does this actually mean for the world? Not collapse, not immediate disruption, but higher short-term energy volatility, wider insurance spreads, more tolerance for opaque flows, and growing reliance on parallel systems that don't appear on official maps, all while exports technically continue. This is the modern energy landscape, where instability itself becomes an input, where uncertainty carries a price, and where adaptation begins long before crisis is declared. Because once systems lose confidence in predictability, they don't wait. They reroute, they hedge, they operate in layers. And that's where the visible energy economy starts giving way to something quieter, more flexible, more deniable, and much harder to control. In the next episode, we follow that adaptation. Where oil doesn't stop flowing under pressure, it simply moves off the map, into the shadow systems that exist because the official ones can't tolerate uncertainty.